Hey guys, so in today's video, I'm going to be doing an in-depth analysis on Molson Coors stock. The symbol for Molson Coors is TAP. And if you're new to this channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing, and let's get right into the video. If you don't know what Molson Coors Brewing Company is, they're a relatively large beer company with a market cap just under $20 billion. They have popular brands like Coors Light, Miller's Light, and Blue Moon. So the first reason that I like Molson Coors Brewing Company is because they are a consumer staples stock. We are currently 9 years into a bull market, and at some point in the next 4 years, I definitely think that we will see some sort of economic pullback. I'm not sure when it will be, but markets are at very high valuations, and we've just been in an expansionary period for a lot longer than we normally are in them. So I think it's definitely a good idea to have some of your portfolio in safer consumer staples stocks. And since Molson Coors is a brewing company, they make beer which is pretty recession resistant. People tend to not cut beer out of their diet during a recession. If the recession gets really bad, then people will start to lower their beer consumption. But unless it gets absolutely terrible, people tend to continue drinking beer throughout recessions. Now for a little bit more about Molson Coors as a company. So they generate most of their EBITDA from the United States, with Canada coming in second and Europe coming in third. Molson Coors has several different segments of their beer company. They have premium beers like Coors Light and Miller Lite. They have international beers like Molson Canada. They have ciders like Red's Apple Ale and Henry's Hard Soda, as well as craft beers like Blue Moon and economy beers like Miller High Life. As you can see here, quite a few of Miller Coors beer brands are present in a significant amount of countries. Coors Light is present in 40, and Miller Genuine Draft is present in 70, as well as Blue Moon is present in 25. Additionally, Coors Light is the 10th most popular beer worldwide. Molson Coors is also very well positioned throughout the world with strong brands. They have the number one brands in the UK, Bulgaria, Croatia, Serbia, Bosnia, and Montenegro, as well as the number 2 brands and 4 brands in the United States and Canada. This is very significant because it means that they have strong brand recognition for their beers. They are also second in market position in the United States, Canada, and the UK, which are where the majority of their sales come from. This means that there is still room to grow for them because they are currently number 2 and they could always get up to number 1. However, it also means that they have a very strong hold on their most popular markets. I will now go into the financials of Molson Coors Brewing Company. Recently, Molson Coors had to take on a significant amount of debt to finance an acquisition. However, they are currently working on reducing their debt, and their debt is currently only at 5.1 times their EBITDA. This isn't anything to be alarmed about and is definitely very manageable. As you can see, in 2012, they had debt to EBITDA of 4.2 times, but they were able to reduce their debt by 1.5 billion from 2012 to 2015. And then, like I said, they took on more debt in 2016. This shows that they have a past history of being able to manage debt quite well, and I don't see this time being any different. They have shown that they can start to pay off their debt in Q2 2017 by reducing their debt by 522 million in the most recent quarter. That isn't shown in this slide because this slide is a bit older. Molson Coors has a relatively strong history of raising their dividend since 2007. This history has been interrupted in 2015 and 2016 because they're going to work on paying down their debt instead of raising their dividend. I agree with this decision because I feel like it is more important for them to lower their debt so that their balance sheet is less risky than it is for them to pay out their dividend. This will make the company safer, and it will be better for them in the long term. I also like that management is thinking about the long-term health of the company and deciding to de-lever the company before it pays out more dividends. They have also been very open about this with shareholders and have communicated that they plan on de-levering the balance sheet before they raise their dividend. This is also great to see from a company's management. Molson Coors has been able to generate strong amounts of EBITDA throughout the last 2 years. They also have very high EBITDA margins, coming in at 21.7% in 2016. This is great because it means a lot of the revenue that they have coming in is turning right into EBITDA, which can be used for a variety of things. Prior to Q2 2017, Molson Coors stated that one of their largest goals was to reduce their debt. In the second quarter of 2017, they were able to reduce their debt by over $522 million. This is great because it means that they are going to be less risky because they have less debt, but also that they are closer to being able to start raising their dividend again because they are going to start raising their dividend once they have paid down their debt. Looking again at Q2 2017, you can see that they reduced their debt by $522 million. Their EBITDA was up 5.7% year over year, and their free cash flow is up 232% year over year. This is all strong growth for Molson Coors, and it's definitely a good sign to see their free cash flow growing by so much, as well as their debt going down like they have been trying to do. I will now look at the valuation of Molson Coors Brewing Company. Molson Coors is currently trading with a forward price to earnings of 15.9. This is great because it makes them one of the cheaper stocks in the consumer staples sector. Most of the consumer staples sector is relatively high in price to earnings because they are seen as safer stocks, and we are also very long into a bull market, which means that a lot of people have started rotating their portfolio into safer stocks. However, Molson Coors still remains relatively cheap compared to their sector, which makes them a good buying opportunity. Molson Coors Brewing Company is also trading at just 1.6 times their book value. This is very cheap. Molson Coors is doing quite a bit better than their industry when looking at quite a few different metrics. As you can see, the average revenue growth for Molson Coors over the last 3 years was 5.1 compared to their industry average of 0.9. Their net income growth was 51.6 compared to the net industry average of negative 26.8. Molson Coors also has significantly better operating margins, net margins, return on assets, and return on equity. All of this shows that they're a very efficient, well-run company that is poised to do well in the future. I will now look at Molson Coors' ability to pay their dividend and their ability to raise their dividend. As I said previously, Molson Coors won't be raising their dividend until they work on paying down their debt. However, after they have paid off their debt, I think they will be able to raise their dividend quite quickly. Their current 12 months payout ratio is only 16%, which means that they are not paying out very much of their income in dividends. This is great because it shows that there is a lot of room for dividend growth. They currently also only have a yield of 1.8%, which is relatively low, but I see it as a good starting point from which they can raise their dividend in the future. Even though Molson Coors is a relatively safe consumer staples company, the company does come with some risks, and it is important to look into these. The first risk that I see for Molson Coors Brewing Company is the growing popularity of craft beers. I don't see this as being a huge issue since Molson Coors has their own craft beers such as Blue Moon, which are very popular. However, I could see it becoming an issue if craft beers become even more popular and it starts to take away some of the market share from their more popular beers like Coors Light and Miller Lite. The second risk that I see for Molson Coors Brewing Company is the legalization of marijuana. At first, this might not seem like it would have any effect on Molson Coors Brewing Company, but I think that the legalization of marijuana could negatively affect beer sales. People only have so much money that they're going to be willing to spend on drugs and alcohol. I could see some people deciding to spend a little bit less on beer so that they can start using marijuana if it becomes legal. We'll need to look at this effect after marijuana legalization becomes more widespread throughout the United States, but it will definitely be something that's important to pay attention to. The final risk that I see in Molson Coors Brewing Company is if they were to struggle to pay off their debt. So far, they have shown strong success in paying off their debt. In Q2 2017, they were able to reduce their debt by $522 million. However, if they struggle to pay off their debt in the future, it will have two problems. First, they will be more risky since they carry a higher debt load. And second, they will be unable to raise their dividend because they said that they are going to work on paying down debt before they raise their dividend. This would be two serious negatives. However, I really don't see this happening because, like I said, they were successful in paying down their debt in Q2 2017. In conclusion, I see Molson Coors Brewing Company as a strong consumer staples company at a time in the market where owning some consumer staples companies is a good idea. Molson Coors has quite a few very popular brands throughout the world. This will allow them to continue growing, as well as allow them to have very good brand recognition with the beers that they already have, so they will be able to generate sales on those as well. I believe that Molson Coors will be able to reduce their debt to a level where they can begin raising their dividend again, as well as that Molson Coors will continue to grow their EBITDA and free cash flow. Once their debt is reduced, I think they will be able to raise their dividend quite quickly. They currently have a payout ratio of under 20% with their 1.8% dividend, as well as they are growing their free cash flow and EBITDA quite significantly. All of this means that as soon as they have reduced their debt, they will be able to continue raising their dividend at a fast pace. I also think that Molson Coors is trading at a very solid valuation with a forward price to earnings just under 16. This is quite a bit cheaper than the overall market in general, and than the consumer staples sector. I hope you enjoyed this video. If you did, leave a like down below and consider subscribing. I make lots of videos on the stock market and investing. Also, leave a comment down below on your thoughts on Molson Coors Brewing Company. I'd love to hear what you guys think about this company.